Good afternoon and welcome to today's expert webinar presented by Accountants World. My name is Div Bensali and joining us today is Jay Abraham, founder and CEO of the Abraham Group. His presentation today is 10 proven paths to exponential growth. Once again, I want to thank you for joining us today. We're excited to have this, our second presentation in the expert webinar series this year, and really looking forward to hearing what Jay has to say today. Before we get started, a couple of housekeeping items. In terms of using the GoToWebinar control panel, if you don't see the control panel, you probably do see an orange arrow somewhere, and you can use that orange arrow to expand or hide the panel in front of you. If you have the panel open and you'd like to see your audio options, you can expand the audio tab and then choose either to listen via phone or via computer audio. And if you select phone call, it'll give you the dial-in number and your access code as well. If you haven't downloaded Jay's presentation yet, it's available under the Handouts tab. You'll see a PDF in there, and you can go ahead and download that. We're going to have a lot of people trying to download that right here at the same time right now, so if you aren't able to download right away, don't worry about it. Just wait a few minutes and try again. If for some reason you aren't able to download throughout the presentation, just email us at Accountants World after the presentation, and we'll be happy to send it off to you. And finally, if you have any questions for Jay throughout the presentation, he's looking forward to your questions and looking forward to answering them throughout the presentation. So just open up the questions tab, type in your question, and make sure to hit send as well. And that'll come through to all of us here on this side. We do offer one CPE for this webinar today, and CPE credit is based on active participation during the live presentation. Active participation means three things. Number one, you respond to all three poll questions in the webinar. Number two, you attend the webinar for no less than 50 minutes total. And number three, there'll be a post-webinar survey which will come up as soon as you close out of the webinar window, when you close that browser window. And after the webinar window is closed, the survey pops up, you go ahead and you fill that out, and then you're done. If for some reason you don't see that survey pop up after the webinar, we'll also email a link to that survey within the next day, and you can go ahead and fill that out. CPE certificates will be emailed most likely early part of next week after eligibility has been confirmed. A brief word about our sponsor today, Accountants World. Accountants World is the leading provider of what we call accountant-centric cloud solutions for professional accountants. And that means solutions that are designed to help you to become more relevant, serve your clients better, add more value to your clients' businesses, and elevate your own practice as well. Accountants World solutions are sold exclusively to professionals like you. We never compete with you by selling solutions to your clients. And our two main areas of focus are two of your core business services, accounting and payroll. We offer award-winning solutions for accounting, payroll, after-the-fact payroll, document management, practice management, and much more. If you'd like to learn more, you can visit accountantsworld.com. And at the end of the presentation, I'll also give you a phone number that you can call up to get a free live personalized demo of Accountants World solutions. I should also mention that you're here today because you're obviously interested in growth for your firm. One of the best ways to grow your firm in the accounting space is via payroll. Whether you're currently offering payroll and looking to grow that practice or make it more efficient and profitable, or you've considered offering payroll but haven't done so yet, we strongly recommend that you attend our free payroll webinar. We'll show you how automation is the key to a more successful payroll practice and how Payroll Relief can deliver more automation than anybody else can. We can automate your payroll processing, including direct deposits, tax payments, and the filing of tax forms. We'll handle all of those things automatically, on time, and with 100% accuracy guaranteed. We can even help you eliminate data entry and check printing in your office so that you can consistently earn more money per paycheck. That's why over 65% of Payroll Relief customers have seen at least a 25% improvement in their practice after switching to Payroll Relief. So if you'd like to learn more, the best way to do that is to go ahead and attend a free payroll webinar. We offer them every week on Thursdays. You can go to improveyourpayroll.com, and sign up today. Before I turn the voice over to Jay Abraham, for those of you who don't know about Jay Abraham, you're in for a treat today. Jay is the founder and CEO of the Abraham Group, but I think just calling him the founder and CEO of the company undersells what he's achieved. He has now worked with over 10,000 clients in more than 400 industries worldwide, and his focus is on helping to improve the both top and bottom lines of his clients worldwide. And you see there a quote from Tony Robbins, who's obviously done amazing things for clients himself. And Jay has been one of Tony's mentors in both his own practice and in changing other people's business lives as well. So without further ado, I'd like to turn the presentation over to Jay Abraham.
Thank you, Devin. And first of all, pardon me, my voice is a little bit rugged. I was at the Kentucky Derby uh, uh, yelling and screaming, so bear with me. And thank you for putting this on. It's an honor and a pleasure to share with you sort of a paradigm that very few people think about. But if any group of professionals was qualified to be able to really grasp it and really harness and harvest it, it would be you. And I hear a little bit of a background noise, Deb. I don't know if it's. I hope it's not but it's like a. Is it me talking just somehow? Anyhow, let me start by giving you about a 1 minute prelude in why I think I have something really relevant to share with you, and why it has three tiers of value. First of all, my career has been denominated on the fact that I created something called funnel vision versus tunnel vision. It far and away, uh, it was far and away preceded the likes of best practices. I was able to travel amongst a multitude of different industries. The slide's wrong. It's exceeded 1,000 now industries, and I'm not saying it to be arrogant, just to give context. When you work in that many different sectors, you get the chance to see an unimaginably diverse ways of thinking, of strategy, tactics, marketing uh, approaches, business models, distribution channels, value contributions, uh, easier ways to initiate a relationship, more lucrative ways to extend them, just a multitude of things. And I've been able to use the aggregate integration of that in a multitude of ways to help all kinds of companies in all kinds of industries, in all kinds of competitive sectors in all parts of the world uh, grow and flourish. And I've done it by what I think is most uniquely focusing on the geometry of a business. And to just clarify, uh, almost any business, and I'm going to show you at least a few examples in your profession, are sitting on a multitude of leverage or impact factors that are sunk costs, but that they don't really realize represent enormous and frequently quantum times greater performance result yield when when optimized and addressed in a different way. So I'm going to share today as many of the high performance, what I call no brainer. These are ones you can almost semi accurately execute, and they're still going to work for you by multiplying the performance and thus the results of your action, your effort, your investment, your access to the market. And I need to make another point, which I think is profound. You may not, but because so many of you work with businesses, and because many of those clients' businesses work with businesses, everything I teach you or share with you or transfer to you today has trilogy relevance. First of all, Directly or indirectly, you can apply or adapt or adopt it to your practice. Secondly, you can use it as enormously unique value creating education you share with your clients, either electronically, in person, in private sessions, in new client generation seminars. Third, you can encourage your clients to share it with their clients for the same reason. Okay, change the slide. Yep, and we've got yeah. Get rid of that. Get rid of that. Okay, now we have the other one behind it. I don't know if that matters, but there's a slide and then another slide on my screen. It may not be on yours. Okay, start right there. So everybody, I am asked all the time, there must be a trillion ways to grow a business. There are a trillion concepts, approaches, uh, techniques, but there are really only three fundamental ways to grow any business. The first is to increase the number of clients, buyers. The second is to ethically increase the average size of the transaction. The third is to increase the frequency of purchase or the utility of purchase, meaning other things that they can you can monetize ethically from them beyond and above whatever you currently offer. There are actually three advanced ways, and I'll introduce those to you also because they're cool. But let's go to the next slide. Go back then. Go back for a minute.
Jay, should I go ahead and launch the first poll question before
Oh,
we
sure. I
go into
forgot
that?
all about that. I forgot all about that. Forgive me. Yes, you should. And
No,
you
no
should
worries.
interrupt me when I forget. So, am I posing it?
I'll go ahead and launch it right now, and I can read it off to people, and then if you'd like
Go
to give
ahead.
any other context. All right, so folks, you should be seeing the first poll question in front of you, and it says, which of the three ways to grow a business do you need to focus on most? And you see three options there, and then the fourth option there is all of them. So please go ahead and select your option and make sure to click the submit button. A reminder, this is the first of the three poll questions that's required in order to get CP credit today.
And Dev, may I talk over it or do we need quietude?
No, no, go for it.
So, everybody, uh, I prepared this. I prepared the PowerPoint a couple of weeks ago. If I were doing a 3 or 4 day intensive with you, I would break down the 10 or 15 most universal ways to achieve each of the categories. And one of them that I was going to use is if I had to propose the poll question was referrals. Most all of you generate hopefully a large portion to 100% of your clientele from either word of mouth or referrals. And yet, it is highly probable that very few of you have in place even one formalized, systematized, continuously adhered to referral generating strategy. And yet, in the course of my work with all these industries, we've uncovered 93 separate referral generating strategies that could be adhered to either ongoing at certain points of convergence when certain things happen, seasonally, cyclically. But the point is, if you use none and you spend any time, effort doing cold calling or advertising or having a website you hope people will follow, and you are the critical thinkers, not I. But there's something wrong with this picture because a referral generated prospective client, number one, is already pre sold. Number two, closes faster, negotiates less, uh, is far more cooperative. Number three, uh, stays longer. Number four, buys more services. Number five, is more profitable. Number six, is more enjoyable. Number seven, refers more people. And number eight, costs nothing. Whereas if you run ads in social media, search, anything. First of all, you're only generating the first tier of trust building. There are many other progressive steps required in most cases to get even close to closing a client transaction, whereas it's almost a certainty if they're going to call you. So, just as a reference frame for highest and best use of time, opportunity, if you have clientele, which you obviously do, 200, 500, and they have within their reach 2, 10, 20, 30, 40 probable like-minded people that could be clients of yours, you aren't putting into play at least 3 or 4 formalized, systemized, referral generating processes. That should be a priority. So just a point. And there's all kinds of others, but uh, are we ready to continue?
We are. So I'm going to go ahead and close the poll here in 5 seconds. So if somebody hasn't voted yet, please go and get your poll
Okay,
in
and
right now.
while you're doing that, I'll also give everybody, because I want this to be stimulating for you. There are actually 3 advanced ways you can grow a business as well. The advanced ways are: number one, penetrate a new market every year. Number two is introduce a new product or service every year. Number three is acquire either a competitive or a complementary business every year, but do it on an earnout so you're not at risk and you're not putting cash out. And it can be a company that does the same thing, a company does the same thing in a different uh, field, a company that does something you don't do, a company that does something complementary that people will avail themselves of before, during, after, even instead. And when you do that with a disciplined strategic bent, you end up owning your market in a very short time. And everything I'm talking about, first of all, is working on the geometry of the business. I don't have the slide here to show you, but if we had the right slide, you'd see if you increase those 3 categories just 10 or 15% with we have a couple of reference examples: a thousand clients, $100 unit of sale, 2 purchases a year, it would be a 33% increase. If you doubled them, it'd be an 800% increase. So the things I'm sharing are mechanisms and methodologies that work on the geometry of your business. And please remember, you can take these insights, you can develop them a bit, and you can share them to your clients as value added. You can have them share them with their clients, and they lend themselves to creating additional services you can perform that will be so revealing and so uh, valuable as far as revenue enhancement, resource allocation, highest and best use, that they have enormous value that is totally value denominated, not hourly. All right, we're going to the next category. And I've spent my life developing a multitude, just a portfolio of high yielding methodologies. I looked at all the functions in a business that had enormous leverage. And I started value ranking them. And we're going to go through the 9 drivers of exponential profit. The first is marketing. The vast majority of people in business, and I would say accountants in business, pardon me, are not the greatest marketers. You have enormous leverage in the following: number one, the market you target; number two, the message you send; number three, the incentive you provide to either start a relationship or do a consult; number four, the credibility you can establish that denominates you over everybody else; number five, the associations you can establish with influencers who can give you immediate trust and credibility; number six, the distribution channels you use; number seven, the different markets you can address in different marketing. I can go on and on, but the point is, well, I'll give you a couple of examples. We've changed a headline in an ad and quintupled the results, the sales. We have changed what people say. when they first have a discussion with a prospect and tripled closes. We have changed the value proposition or the risk reversal in starting a relationship and quintupled the sales. Seriously. And each one of those is separate lever. And I'm just trying to get you excited, not about what you are doing, but about what you're not doing. Next, Dev. Okay. The second is strategy. Change your marketing, you change your results. Change your strategy, you change your results. And with all due respect, the vast majority of enterprises, whether commercial, professional, service, they are not strategic, they're tactical. They do a number of different things, a number of different ways, and they're erratic, they're not congruent. They don't realize that all your tactics should be uh, should be executed to advance and enhance your master strategy. Within strategy, most of the people, I can go back to marketing as well, and as an accountant, I'm going to take you respectfully and benevolently to task. Many companies, businesses allocate either a share of their revenue or profit or an arbitrary budget to marketing. When you do that, whether you do that or you allow your clients to do that, you're either over or under investing, not spending. Why? Because when you learn to analyze things like the quantified value of a first time uh, buyer from different sources and different offers and different industries, when you learn to analyze lifetime value, when you learn that by adding one more product or service, it can double or triple the value of that client, when you learn that certain types of clients or buyers, because this needs to be translated to your own clients, can be worth far more initially, but not as much over time, while others aren't worth as much initially, but are worth 10 times more over time. You should know that instead of having an arbitrary budget or a percentage of sales, you have allowable costs that are ascribed to different categories of sourcing. And Deb, if I get confusing, you are the advocate for them, so take me to task. Does that make sense?
Yep, that does.
Okay, and I'm just giving you the introductories to this, but most of you don't even have a strategy. You're episodic, and I'm not saying you being critical. It's all small business. You're episodic, you're erratic. You decide, okay, I'm going to run an ad, and the ad doesn't really offer. The key to marketing is you should have a headline that denominates the biggest, the highest yielding benefit, advantage, protection, enhancement that reader, that target is going to get from either reading the rest, visiting your website, talking to you, attending your workshop, whatever it is. You should have proof. You should have some examples. You should have a preemptive way of addressing negativity or skepticism or doubt or apprehension that they are going to feel. You should have a commitment of an outcome. You should have a summary that is a articulation of what they are probably feeling and they want, whether it's greater control, more yield for their sales and marketing budget, more whatever. And then you should be congruent and deliver on that when you have interaction with them. Next. Okay, this is huge and it's got multitudes of implication and application. One of the greatest levers a company has is the way they deploy every facet of capital. One facet is obviously money, uh, how you spend it, whether you spend it on services or products, whether you spend it on results that services and products produce, whether you you negotiate full pay or whether you negotiate partial pay and a variable based on how the product saves, performs, etc. How you use your marketing. If you can convert payment from fixed to variable, meaning if you're in a legal situation where you can pay for results, results can be leads, they can be conversions, can be the first time sale. Uh, if you can get experts and instead of paying them fees, you convert them, help them see how their expertise properly deployed transforms itself into results, be they savings, efficiency, higher profitability, productivity, throughput, whatever, and get them to, instead of costing you $10,000 or $15,000 a month you don't have allocated, you have an unlimited budget if you're paying for results. You have an unlimited budget. Other forms of capital, intellectual capital. If you have a process in your practice that is more efficient, more effective, whether it closes more people, it gets more people to attend a workshop, whether it processes better, faster, and you are only local or regional, you can take that process and you can share it either on a training basis, a fee basis, if it's legal, a revenue sharing basis with all kinds of other people in the same field and often others. Give you an example. I had a client that had a process in the lumber business for kiln drying lumber. It's the biggest expense, and he had a way of getting the expense down 40% and also uh, doing the kiln drying in a way where the quality of the lumber it produced was almost all double A and the moderate and the mediocre lumber was low and the waste was almost non-existent, which was not the case with most lumber mills. My client couldn't even give the lumber away past about 1,000 miles because of the cost of shipping. So we ended up drawing a circle around his effective marketing area, and we literally licensed his methodology yearly for $25,000 to, I think, 200 different lumber mills around the world. And then we started adding refinements and charging for that. I had an attorney that was masterful at doing $1 million practice with two legal secretaries, and he had no growth. He had a specialty, no growth interest whatsoever. So he got 500 other attorneys to pay him $5,000 a year to learn his methodology. We had a car wash that had a process for upgrading to the super deluxe process, and they had about 5 times the average, which was making them an extra $20,000 a month, but their effective marketing range was all about 5 miles. Past that, it didn't matter. So we got, I think it was 1,000 other car washes around the country to pay $200 a month to use their upgrade. That made him 200 grand instead of the 20,000 he was making by using it. We did the same thing with a dry cleaner in Chicago, who had on average 3 times the average revenue from each of his 3 dry cleaners, but he had no growth interest whatsoever. So he created an advisory letter for $100 a month, and he got 1,000 dry cleaners on it. And he just shared his uh, his communication with everybody signing a warrant. They wouldn't use it in his marketing area. The person who is the co-chairman of Keller Williams was a protege of mine back in the 90s, and she had sold her real estate company in Oklahoma for a lot of money. She had 5 or 6 offices, and she was on a non-compete for 30 miles. But we realized she was at that point way ahead of everybody at the ability to list property, which is the best in an upward market. That's the best thing to do. So she started. I showed her how to go outside those 30 miles, and she set up a business that she only did on the weekends, teaching her methodology to other realtors, and made 90,000. So I'm just giving you ideas on things that you do or know. Financial capital has a lot of different methodologies. We've done about $2 billion for people by focusing on relational capital. Uh, Organizations, companies, influencers, media that had the target audience we wanted, where we were able to literally establish JVs with them, where it was legal, we would basically share on revenue. Where it wasn't legal, we would find some ethical way to do it. I did $250 million of seminars in a 2-year period, and I think I spent a couple $100 uh, out of pocket. But people have, we've done things. I mean, the greatest lesson I've got is I had a motorcycle manufacturer in China a couple of years ago that wanted to grow. The bank wouldn't give him any money. He wanted to go outside of China, all over Asia, and open up a factory and hire salespeople. And I believe that whatever you want is a solution to somebody else's problem. So I advised him to go all over Asia and find somebody in a complementary, not a competitive field, and do a JV, because that company probably already had the distribution, the salespeople, the retail dealers, and he probably had, or she, a factory underutilized. And it took me 3 minutes to explain that. And a year and a half later, I came back to China. He came to the mic smiling like a Cheshire cat. He had done what I said. He went to Kuala Lumpur. He made a deal with the largest lawnmower manufacturer, who had a second shift that was underutilized. All this guy had to do was bring the tools and dies. They had the workers, they had the salespeople. He just had to train them. In the first year, they split $10 million for almost no investment. I can give you 1,000 examples of that, but it's using capital, relational capital, intellectual capital, uh, 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 converting fixed payment to variable. And I'm just giving you ways of thinking differently. Also, looking at one of the biggest problems with most small entrepreneurs, they are two-dimensional and not three. The difference between an entrepreneur and a small to medium entrepreneur and a private equity firm is most entrepreneurs are looking at revenue less expenses. They're not looking at yield. They're not looking at what something yields them over residual time. I started out many, many years ago with the product Ice Yacht, which today is a consumer product. It started being a company that was where the product was sold by mail. It was an old line company. We weren't even going to buy it. It was down to almost nothing, but we studied the metrics. Turned out that every time we got 10 brand new $3 buyers, 8 of them bought every month forever, or until somebody came up with a cure for arthritis and bursitis. Half of the 8 bought another product. A half of the 4 bought bulk every year. It turned out every time we got 10 new $3 buyers, we ended up making $50 net per buyer per year. And the product cost us 55 cents back then, a long time ago, to make and ship. We went to radio stations, television stations, publications. We didn't have any capital allocated. So I persuaded them to run ads when they had not when they had available time or space, and it wasn't sold, and we let them keep all the money and gave them more. We gave them $3.45, and nobody had ever done that on a $3 sale. But because we were making $50 a year forever, we could have given them $49, and as long as we could have financed it, we'd still make out like mad in year 2. But to make a long story short, we got 500,000 buyers in a year. We got what today would be $145 million worth of no cost advertising. We accidentally forced retail distribution because people started asking for it at their groceries and pharmacies. It got sold for approximately $60 million to GD Searle, which was a large Chicago pharmaceutical company that got acquired by somebody else. And the hilarity of this was they were so rigidly and linear minded that when they, pardon me, when they bought the business, we were put on a non-compete for the category, arthritis remedies. They did not want our 500,000 buyers because they were consumer. They didn't want the people who generated all the profit. They didn't want our 1,000 distribution channel media. So we just found other products that were not competitive and went right back. But it's a way of thinking differently about everything you do. And I can give you more stories like this, but I won't go through my intention for you. Next. Jeff. Oh, okay, your business model. All right. Your business model can change everything. And you really can't have a business model until you explore and analyze migration, lifetime value. Let me give you an example. I had a client many years ago that they were in the fluid transmission business, and that's nothing more than PVC pipe that is used to transfer fluids. In manufacturing, it's usually chemicals. In beveraging, it's usually syrup. In agriculture, it's irrigation. And they came to me for a breakthrough because they were stalled, stuck, and they were regional and they had only 5 salespeople. And the first thing I wanted to know was the lifetime value because they didn't know. And most people don't know. They don't know how many clients they've got. They don't know how to reactivate clients. They don't know how, if they can't reactivate, how they can get value out of those clients by getting them to refer somebody else if they're no longer in that business. They don't know how to look at the residual value a first time buyer is worth in different categories. They don't know how to analyze, uh, annually the number of purchases, the value of the purchases, the lifetime predictable yield of the purchases by different categories, different types of buyers, different sources of buyers. I'm just trying to give your mind a little bit of the possibilities you're sitting on and that you could turn into services for your clients that would be invaluable because shifting all this can double or triple or quadruple or quintuple or 10 times. And I'm hoping you will look up my name, not because I'm that impressive, but I have so many thousands of success stories where that happened that it's not smoke and mirrors. It's just that most people grotesquely limit, restrict, constrain, undervalue the performance capability of everything they do. And each one has 10, 15, 20, 30, 100% more yield. And combined, they give you geometry. But on your business model, first thing you have to do is figure out what your end game is. For example, I didn't finish my story, pardon me. So these guys went back and I gave them a formula for figuring out marginal net worth, lifetime value. Turns out, to make it very simple, the average brand new buyer was worth $200 profit on the first sale. The average worst case, I always look at worst case, not best. That way I'm conservative. First time buyer bought 5 times a year at $200 profit and bought for 3 years. I'm hastening this because I have so much more I want to share. So the average first time buyer who buys $200 of profit is worth $3,000. Then I asked them what they were paying the salesperson, was 10% of the profit. Then I made a wild guesstimate that their salespeople had not generated any new clients of worth for a long time. And they said, you're right. And I said, well, why would they if they only see it static as being worth $20, 20%, or excuse me, 10% of the 200? I said, try this test. Go to them and tell them that if they keep their production, their sales at or above par, meaning whatever it's been averaging monthly, seasonally, that they can have 100% of the profit for every new client's first sale they bring in. And there were two brothers, and they went, why would we want to give away $180 of our profit? And I said, you're not. You're investing $180 you did not have and you never would have for the 90% of the 2,800 you absolutely will. They did it and their business quintupled. That's what you have, not just with your practice, but the ability to do for, with your clients, their clients. You can do it as service value. You can do it as services that have value that you charge for because understanding and analyzing and improving can make the same effort, the same investment, the same access to the market, the same opportunity, the same capital, the same infrastructure produce multiple times more profit. I don't care much about volume. I care about multiplying the profit. And if the volume expansion is a correlation necessary, fine. But I look at yield. I do not look at short-term or two-dimensional aspects because it makes no long-term sustainable profit sense, nor does it make sense if you're looking at the business as an asset for a future exit event. Okay, next.
And Jay, just so you know, we've got about 17 minutes left here or so.
Okay, well, this is probably the easiest thing to, well, let's do this. Let's skip to the Parthenon just because I've got five more of these, and each one is as simple and obvious, but it's like it's epiphanies are nothing more than seeing what you've always had available in the light of transactionalizing them and monetizing them and harness and harvesting them. Why don't you just go through so they see the titles, and then let's go to the Parthenon.
All right, so I'll go ahead and continue
Relationships, and I
on.
can get into that for an hour, so let's move on to the next one. You can leverage relationships, internal, external, influential, uh, market leaders, marketplace influences, uh, how you use your existing or potential distribution channels and markets is critical, and we'll get into this in a moment. Anyhow, next, same thing. Next, products and service. You add an easier entry product or service, you get a lot more people to start. When you're done, or if you have basic service, by bringing on a special service or product or productized something that has outrageous evident ROI that can be demonstrated way above the cost, you can triple the value of a client, and you can really ingratiate your value in a much more dimensional and sustainable way. So front end, you add easier entry products, or it doesn't have to be a product. It can be a workshop. It can be a book. It can be a consult. It can be a self-assessment. On the back end, it can be a more expensive ancillary product. Throughout, it can be upgrades. Every 3 months, you can, for another $1,000, do a complete aggressive assessment of intangible asset performance. I tried one time and I couldn't figure it out to unify it, but you've got risk management, you've got asset management, you've got wealth management. Nobody does anything with intangible asset management, and you've got outrageous leverage there. Next, same thing. The processes and procedures. By taking, I mean, I've got a very storied background. I worked for the Deming organization, the father of process improvement optimization. I worked for the largest, as a consultant, the largest multivariable testing organization that tested one approach against another in retail and customer service and manufacturing. And variation, I also am good friends with the number one person in the world in Six Sigma. But variation or underperformance in your processes is not only commonplace, it's the rule more than the exception. And most people don't even know how to take a macro process and then break it into the sub processes and then quantify on some either very finite or at least indicative basis. But we have a field day. It's like you're a kid in a candy shop if you understand even a fraction of this. Next, your ideology. All the things I'm telling you, if you think that's BS, then you're right. I happen to stand for $21 billion of profit improvements worldwide that have been documented by, if you want to just to try it, not to my ego, but to credibility. If you look at that 10 years ago, but this January 2018, you can go to Forbes.com, Inc.com, entrepreneur.com, and Huffington Post, and there's major articles about my work, my methodology, and my success history, just to validate that if you have the right belief system, everything I'm sharing is profound, liberating, emancipating ability to just blow your practice into the stratosphere and do it safely and without spending a lot of capital, just understanding leverage, upside leverage. There's two kinds of leverage. It's like cholesterol, good cholesterol, bad. There's the leverage that you or a client gets in where they buy an asset or a piece of equipment, uh, and they either hope and pray it'll yield more than the debt service, or it'll appreciate and be able to be sold. I don't deal in downside risk. I deal in as close to no risk on the downside and infinite upside in everything you do. And usually there's no extra time involved, no extra effort, no extra cost, no investment, no, you can profit partner without giving up equity or anything else. Your client can do the same thing. It's very easy. And if you do it right, you've got an infinite number of elements that each can be made to perform higher. Some 10%, some 20%, some 5. But the combination gives you geometry, gives you exponential. Very powerful. Next. So I'll do this and then we'll stop and see if there are any questions. So I've created a lot of different uh, methodologies over the course of time just by studying it. Oh, okay. Next one. This shows that model, and you can see it real quick. This is a company with 1,000 clients, $100 unit sale, 2 purchases a year, 200,000 of volume. Next client. Next. Okay. And we're going to do a polling question in a minute. We're showing you if you just increased those 10%, it doesn't extend to 10%. It's 33%. Give me the next one. And we show you if you increase each one a little bit more, it's real easy because I can give you 10 to 20 areas in each one that nobody does. It's 250. If you doubled it, it would be 800%. But that's where the power of geometry comes in. And that's just on those areas. Everything else I share with you is another dimension of leverage and geometry that just adds to it and multiplies. And you want to do another polling question, right?
I can go ahead and launch the second poll right now. So let me go ahead and get that up here.
Okay. Very good, Dev.
All right, folks. The second poll question should be up in front of you. It says, how many ways are you growing your business? Check all that apply, and you see 5 options in front of you. And you can select one or more of the following. And after you select, since you can do more than one of them, select all the ones that apply to you. Go ahead and click submit. Just a reminder, this is the second poll question, and voting in all 3 of the polls is required in order to earn CPE today.
In Dev, I see almost no questions. In fact, I see no questions except how do I get CPE credit? Is there no questions?
We haven't had one
All
come
right,
in recently. Let's see.
it's okay. We're running out of time anyhow. Let's go to the next.
All right, so I'm going to give about 10 more seconds here for folks to
Very good. I'm
finish
sorry. Yeah, please.
filling out the poll. So we've got
That's
about
fine.
almost 90% of people have voted. So if you haven't voted yet, go ahead and get your vote in now.
Pardon me.
And we're going once, going twice. All right, so
Arrow.
Jay,
Go to the
80%
next. Go to the next
said
slide.
referral systems or endorsements. You want me to just move on?
Yeah, go. Let me just show the next one. Then we can go and next slide.
All right.
Okay, next. Okay, this is fundamental to almost every business. And if you all really grasp this, you'll be a hero to every client, and you might be a hero to yourself and your stakeholders. So this is called this, I want to tell you a different facet of geometry. And we call this the power Parthenon of geometric growth. And it starts by giving you a graphic image of what most businesses look like. And they remind me of a diving board because the revenue is supported by one primary revenue approach or source. In this hypothetical example, we use direct sales. It can be referrals, it can be workshops, it can be social media, it doesn't matter. But 90% of the business is almost always driven by one source of which you are susceptible and exposed to much danger. If whoever's selling for you goes to the competitors or stops, if your competitor starts doing a better job or doing what you're doing, and you'd had a free access to the, to that approach for a while, if any of a number of things happen in the market, you're screwed. And I've never seen a diving board being a permanent propellant to upward achievement. You do go up as you start careening down and plummeting to earth. But what we prefer doing, next slide, is building our clients what we call a power parthenon. And this is just a simple first level graphic to show you, even with one more pillar, one more leg, it looks more sturdy, doesn't it? More stable, less uh, less volatile. But what we do with clients that I work with, and this is not at all about me, it's just telling you how I think when I work with a client. Next slide. We move towards this. The big one on the left is the main one, but we try to add direct sales. Telemarketing may not be applicable. I haven't changed the slide for a while. Referral systems, joint ventures, direct mail, advertising, endorsements, host beneficiary. It's a different kind of relational capital, media, blogs. And then underneath each one of these, you can really have sub parthenons, because like I said, there's 93 different referral systems. I can show you how to use direct mail or telephone to set an appointment, to confirm an appointment, to follow up on a commitment, or post attendance at a event, to confirm a meeting that's scheduled, to welcome somebody. All kinds of leverageable ways that enhance three things: uh, commitment, post purchase dissonance, uh, closing, everything. But I can do it for all these. But take a look at, if and by the way, if you look at even your clients and ask them the way they sell, you're going to find, if you have a lot of business clients, some of them do direct mail, some of them do social media, some of them do just referral, word of mouth, some of them do direct sales, some of them do conference booths, some of them do workshops. If and that drives almost all of their business. But if you incorporate uh, a a portfolio of sourcing, and let's say that the left hand big pillar has been 100% or 90%. Now, if you add each one of the other 8 or 9, and each one only added 10%, it's even more than the three ways, where 10%, 10%, 10% was 33%. And this is all on top of those three ways. Plus, if you do it right, it is not uncommon to uncover one of these new sources that's a home run, even a grand slam. And then, Dev, I'm going to stop there. But the point that I'm here to make is that you, as an accountant, certainly within your practice, secondly, within the businesses, the diversity of businesses you counsel, and third, within the spectrum of businesses your clients serve, you have unimaginable upside leverage opportunity for educating, for preemptive uh, disseminating of outrageous revelation that's really elegantly simple, for creating services that can instantly and continuously multiply ROI by orders of magnitude. And I hope today I've stimulated your mind. And if I've not, I apologize. If I have, I'd love to have a couple questions in the remaining 5 or 6 minutes. Dev?
Sure. Yep. And actually, we do have a couple of questions here. One question was, you say here on the left-hand side, developing a back end. Can you explain exactly what developing a back end means?
Sure. Uh, a back end can mean a multiple of things. If you are a single, like let's say you have a company that you advise, and they've got software as a service. Well, their back end could be training, their back end can be maintenance, it can be subscription services. Uh, but it costs a fortune to acquire the first transaction. Once you have the trust and the respect and ostensibly have produced validation of your proposition, you have a very receptive person, and selling them other products or services costs almost nothing and is very profitable. Depends on the business. If I were an accounting firm and it's legal, I would create all kinds of package services that look at things like what I'm saying and analyze what they're good at, because most of these people don't have a clue. I would help them formulate where they should be spending their marketing. One of the things I do a lot of is I'll look at a lot of startups for people who are going to invest, and these people will just put in a holding place a random figure for marketing and sales. Maybe it's $1 million, maybe it's 100,000. They don't have a clue how they're going to use it. They don't have a clue how they're going to measure it. They don't have a clue what how to tranche it and test it. I mean, there's just all these things that you could do as a back end or an upgrade or a package that would not be hard to sell if you can demonstrate that every quarter when you do it, you're going to either revalidate your previous not assumption, but but uh, but empirical conclusion, or you're going to change. I mean, I can give you a bunch of things like that, but does that help?
Yep, that does. Should we go ahead? Do you want to cover the sticking points slide that comes right after this, and then I'll launch the poll
I
right
can
after that?
try. I have to leave myself at 1:30, but let's go ran through real quick.
Okay.
Go ahead. So I got all these different categories. We just picked some that were cool. But here's the top three reasons most businesses stagnate, they get stuck, they stall. And it's very possible, very possible that you can have a client that is not seemingly stuck because they're growing at a very acceptable level every year, but they really could be successfully stuck because that growth in profit at least could be double or triple. It doesn't have to be uh, uh, revenue. So these are the three reasons. They don't incorporate growth thinking into everything the owner does, and they don't look at everything with that eye. Number two, they don't measure, monitor, compare, and quantify all the results they're getting. There's a quote from Socrates: "A life unexamined is a life not worth living. You should live by a motto I will let you own." It's that a business that isn't constantly examined and re-examined is a business not worth owning. And you have not even yet, I suspect, figured out all, it's not a criticism, it's an opportunity, all the denominators you could be analyzing for that business that have enormously revealing and enormously enhanceable value. The third is not having a detailed strategic marketing plan with specific growth expectations, working backwards, having uh, hedge strategies in place when you know all the options that are possible. Now, real quickly, we'll go through what they are. So here's the 9 sticking points, and we have a book called The Sticking Point Solution. And Dev, I'll be glad to give you the electronic file, and you can post it on your website if it helps. But here's the reasons most people are stuck. They're losing out to the competition. That's because, number one, they don't have a good, definitive, delineated, differentiated, preeminent position. It takes too long to explain it. They're stuck not selling enough. Well, first of all, they don't know consultative selling. They don't know advisory selling. They haven't taught all their people how to do it that have client contact. They have not really understood how to target the best markets. They don't have a good sales system. They don't understand all the different elements in the sales process that can be leveraged. Three, are you stuck with erratic business volume? The reason most people are is that they don't have sustainable processes going on continually to feed their prospect pipeline and convert them. They don't target multiple sources for different reasons. I have clients where we have 2 or 3 different agendas. One is bringing people in that aren't going to be as valuable long term, but they're going to generate more front end cash flow to service the growth and the ongoing. And the longer term, what I would call the lifetime value that's going to be really explosive are the ones we're bringing in now at a break even or a loss. Are you stuck with erratic? I told you that. Are you failing to strategize? Almost everybody is. They don't even know what strategy is. Are you stuck with cost eating up all your profits? If you are, there's many ways to do it. You can move certain fixed costs to variable. You can get experts to come in and help you and pay them on the result. We had a company one time that did delivery uh, for medical people. They would deliver urine samples, blood samples, but on the way back they were empty. The main delivery services that just go regular with no time pressure. They have enormous expenses with trucks, insurance, drivers, routing, infrastructure. We realized we were empty on the way back, so we went to a couple of the big ones and said, "Well, you can get rid of all your overhead. We've got routing, we got trucks, we got insurance, we got dead end," and we made a consolidation, and we both made millions of dollars just by using that kind of synergy. Uh, are you are you stuck still doing what's not working? There's a lot of data that says that half of the marketing and selling people do is either neutral or negative, but they don't even know how to measure it. There's so many higher and better options, but if people keep doing what doesn't work or what is really erratic or marginal because they don't know any better and they don't even know how to measure it and they don't know how much more is possible from the offer, from the opportunity, the access, the investment, then they can't fix it. Are you stuck being marginalized by the marketplace? That's your fault. It's not the markets. If you don't know how to distinguish yourself as proprietary, how to add to what you do, services, value-based products, things you do that they others don't at the same price or even at a premium, so it's incomparable. When I speak at a big conference, everyone else does an hour. I do 3. I do an hour of basic. I give 2 hours after lunch of Q&A. I give them enormous resources to send out promoting me. I put them on their website. I do a lunch with their sponsors, and I do sort of a mini hot seat with their top attendees, and it's all part of a package. But I charge more, but it is incomparable to just an hour speaking gig. Number not 8, are you stuck with mediocre marketing? Well, you have to be if you've never been exposed to all the options, opportunities, and variations you've got within that realm. Are you stuck saying, I can do it myself? There's a very interesting expert on effectiveness who says most entrepreneurs who try to do it themselves are so underperforming potential. You should pick the 3 most important functions your business pays you to do or your client's business. You should then break them down in sub elements or processes. Then you should value rank them for yourself or your client on terms of relevancy, competency, passion. You might be the best person in the world at opening up the office in the morning, but is that really the highest and best use of your time? Since all we all have is the same time, effort, and the denominator is really how much better we outthink, out strategize, out market, out value, contribute. Uh, Number 2 is competence. You might have to work your asses off, excuse my reference, to get mediocre to do something, whereas that energy and that time and all that effort channeled to something that you're operating in the elevated level of magnificence is going to produce many times higher yield, higher and best. The other is if you're not passionate about it, you got to work your butt off to get passionate. It's a waste of energy, opportunity cost. By the way, there's research. Uh, the average team member only produces 20% of their capacity. Everyone goes, I can't find quality, good, quality help. And my answer is no, you won't. There's two ways to do it. Either hire the best and cry only once, or hire people that are trainable and grow into and developable and grow and develop them. It says thank you, and it's appropriate for me because I'm out of time. I hope that was helpful. Oh, we got to ask the last question. The last
Yep.
polling
So I'm
question.
going to go ahead and launch the third poll question here. And so the third poll question, very simple question: where are you stuck? Again, check all that apply. So you have 5 options there. Select one or more of those, and then go ahead and click the submit button. Reminder: this is the third poll question, and then the last thing you'll do to get your CP credit, if you're interested in getting that, is fill out the post-webinar survey that's coming up. So we'll give about 30 more seconds here for people to fill out the poll question here, and then I'll go ahead with a closing slide here. But in the meantime, Jay, thank you very much for your time today.
Yes,
Do you have to?
I hope it stimulated fresh and and uh, and a possibility-based thinking.
That sounds great. Well, thank you very much for your
Okay,
time.
thank you.
Everyone has your
Goodbye.
slides
Bye,
as well.
everyone. Thanks for accommodating me.
Yep, absolutely.
Okay.
Okay, so we're going to take just about 10 more seconds here. I see just over 90% of you have voted now. If you haven't gotten your vote in, please go ahead and do that right away. All right, going once, going twice, and we are done with that poll. So we'll go ahead and I'll show you still saying I can do it myself and failing to strategize were the top 2 responses there. I've had a couple of you write in to say, will this webinar be recorded? Our webinars are always recorded. You'll get a link to the recording as well. I know Jay covered a lot of information today, and there's even more on the slides there as well. And then just quickly, I want to go ahead back to here and hopefully you can see now. Once again, thank you for joining us today. Our next expert webinar, the third in our 2018 expert webinar series, comes up in just a week. If you are looking at succession planning for your firm, if you're thinking about it within the next 5 years, or if you're looking at a potential merger or acquisition situation on either side of the table, would definitely encourage you to attend Joel Sinkin's webinar 1 week from today. That one is earlier. It's at 2 p.m. Eastern. And Joel is the authority on succession planning and M&A for accountants. So definitely encourage you to go ahead and attend that. You can go and register for all 15 of the expert webinars at once. Go to 2018webinars.com, 2018webinars.com. And as I mentioned before, you can go and check out the payroll webinar that we offer at improveyourpayroll.com.
Excuse me, Div.
Yep.
I hate to interrupt. Your microphone is scratching. So if you don't mind, I'll just take over and just conclude our session here, just so everyone can hear all the information. I know Div recommended our webinar next week featuring Joel Sinkin on succession planning. You can register for all 15 webinars at once at 2018webinars.com. And for a live personalized demo of Accountants World Solutions, you can call the number listed on the slide below. And Div, if you want to flip to that slide that features the payroll webinar, that's correct. We offer a free payroll webinar every Thursday, and you can find out about it at improveyourpayroll.com. Thank you so much for attending today, and we hope everybody enjoyed the webinar. Thank you so much. Bye-bye.